Everybody, this is John down in Cayman, and it's been great taking some time off. I'm still down here with my family. I've really just been looking at the markets at the end of the day, kind of start diving back in, looking at some of the markets here, and kind of reviewing some of the positions that I kept while I was down here, and also just kind of seeing where the market is. So let's dive in. First, let's look at the S&Ps. Keep in mind that though we obviously had some crazy volatility, the volatility continues to be within normal kind of deviations. This is the linear regression channel, and if you think of this as just kind of a channel, the market continues to trade very well within it. It's in a downward daily trend, and at this point, I'm not looking for the S&Ps to go much beyond where they are right now. One of the things that remains true, grease or no grease, is that SPX 2100 is in play, and I think we're going to end up trading fairly close to 2100 by expiration. Okay, so and by the way, I think that the odds that we could actually roll over here and retest these lows and go lower is fairly high. Just keep in mind that it's all going to be within this range and that 2100 is still in play. Okay, so biggest picture here is I'm actually not looking for a big breakout to the upside on the S&Ps, but I'm not looking for imminent collapse or anything like that either. If we look at the NASDAQ, I got my island internet going here. The NASDAQ, same thing. Last week, when it looked like it was the end of the world, we were testing the bottom of this range, and now we're at the upper half of this range. So again, at this point, I'm looking for additional upside to be limited. And with monthly expiration, it would make sense that we'd get kind of choppy action for the rest of this week. And let's just kind of look at the RUT for good measure here as well. RUT not quite as violent of a move here compared to the other indexes. You can see here that we did come down into this level pretty hard, but at the end of the day, we're able to hold, kind of staying within 2 standard deviations of the mean there, and now working our way back up. And then last but not least, let's look at the Dow. And the same thing here on the Dow, the diamonds, that we're just essentially kind of at the top of this channel, and I'm looking for upside at this point to be limited. Okay, let's take a quick look at some of the other key markets. For the dollar index, obviously very volatile with the news of Greece and everything like that, but you can see that it's really just stayed within a pretty narrow range. And if we come here and we look at crude oil is something that actually I had been watching. It actually did get a daily sell signal with that squeeze, and since then has been selling off pretty hard from 60 down to 50, almost in a straight shot. What's interesting with this is that if we look at a weekly chart, and we can bring that up here, we can see that we had a weekly squeeze back here, okay, and then since then, or actually I want to look at the monthly chart here. We all know that this huge squeeze fired off and it lost momentum, but you actually need 2 momentum bars in a row to kind of say that it's over. Okay, like i.e. there was the big squeeze up. And at this point, we've still got a monthly squeeze to the downside. And when you see something like this, it just kind of rips the guts out of all the bulls that were hoping for a move back to 75. And by the way, everybody in the oil industry is on their hands and knees praying for that. Typically, it means we got a little bit more flushing out to do. Hope it helps. You guys have a great rest of the trading week, and we'll see you at the next update.